Good morning, students. In this morning, we are going to discuss about Unit 2, Not-for-Profit Organization. First of all, let us know about the not-for-profit organization. This organization may be created for the purpose of rendering service to the public without any profit motive. Generally, this type of organization do not undertake any trading activities. So, this organization always known as non-trading concerns. In this first chapter, we have referred incomplete accounting records. Those records are maintained by trading organization. They will undertake any kind of all kinds of trading activities. So, they decided to know about the profit or loss earned during the accounting period. But in this chapter, we are going to discuss about the not-for-profit organization. In colloquial language, service organization, philanthropical organization. Right. This organization established for the purpose of rendering service to the public without any profit motive. Right. This organization always prepare a final accounts at the end of each accounting period. In the end of final accounts, they prepare three types of statements, not the accounts, statements. First one is receipts and payments account. Receipts and payments account. This accounts only deals with the cash transaction and it resembles a cash book. In the 11th standard, we have studied about the 3-column cash book. The receipts and payment account is similar to the cash book. The receipts, the cash received from the organization may be recorded under receipt side, debit side of the receipts and payment account. The debit side of receipts and payment account is known as receipt side and the credit side is known as payment side. So first of all, the not-for-profit organization preparing first step is receipts and payments account. The receipts and payment account is similar to cash book. This account contains debit and credit. Debit side, receipts. What are the cash receipts are there recorded under receipts? What are the cash expenditure, cash payments are recorded and at the credit side of this account, that is known as payment side. Right. The purpose of preparing receipts and payment account is to find out closing balance of cash balance, cash in hand or cash at bank. Once again, the purpose of preparing receipts and payment account is know about closing balance of cash in hand or cash at bank or bank overdraft. Right. How we will find out the cash balance or balance of a bank? The receipts. If the receipts exceeds over the payment, the receipts exceeds over the payments, it may be taken as cash balance or bank balance. Once again, the receipts exceeds over the payments, it will be treated as cash balance or bank balance. If the payment exists over the receipts, if the payment exists Over the payments, it should be taken as bank overdraft. Once again, if the payment exceeds over the receipts, it should be taken as bank overdraft. So first account is receipts and payment account. It contains only cash transaction. The non-cash transaction, non-cash items should not be recorded in this account because this account is prepared on the basis of cash. Cash basis. It follows cash basis. We have seen already in the 11th standard, there are three bases to prepare an account. One is cash basis, another one is accrual basis, and the third and the final one is mercantile hybrid basis. So this receipts and payment account prepared on the cash basis. So non-cash items should not be recorded. What are the non-cash items? There's no cash movement. When there is no cash movement in the transaction, the items known as non-cash items. For example, depreciation. There is no cash movement. It records only the reduction in the value of fixed asset. There is no cash expenditure. We didn't spend any money against the depreciation. We are deducting the value of fixed asset at certain percentage every year. So there is no cash movement. So first item is non-cash item. And then bad debts. There is no cash movement. The debts which cannot be recovered from the debtors is known as bad debts. So there is no cash movement. We didn't receive any cash. We cannot receive any cash from the debtors. It is termed as bad debts. So second item is bad debts is a non-cash item. First item is depreciation. And then outstandings, whether it is income or expenditure, outstanding income or outstanding expenditure. There is no cash movement. For example, it may be income, the cash will be received, to be received, but not yet received, still yet not received. Outstanding expenditure, the expenditure will be paid, not yet paid. So there is no cash movement. So these such items are called as non-cash items. Bad debts, depreciation, whether outstanding income or outstanding expenditure. So once again, we will see elaborately about the receipts and payment account. Receipts and payment account is the summary of cash and the bank transaction. Receipts and payment account is a summary of cash and the bank transactions pertaining to the particular year. So this account prepared on the basis of cash basis. The cash transaction should be recorded. Only the cash transaction should be recorded. Non-cash item should not be recorded. What is the nature of this account? The nature of this account is real. The receipts and payment account is a real account in nature because it deals cash. Cash is a real. Okay. So this account, the receipts and payment account is prepared to find out closing balance of cash in hand or cash at bank or bank overdraft. Okay. So not-for-profit organization prepares at the end of the accounting period. First is receipts and payment account. The second one is income and expenditure account. Income and expenditure account is similarly known as profit and loss account. It is similar to profit and loss account. So not-for-profit organization prepares a second account is income and expenditure account. Income and expenditure account is similar to profit and loss account. This account, income and expenditure account, records the expenditures at the debit side and the incomes at credit side. So income and expenditure, income at credit side, expenditures at debit side. The purpose of this account to find out surplus or deficit. The purpose of income and expenditure account to find out surplus or deficit. Right. Income and expenditure account is similar to profit and loss account. It is prepared to find out surplus or deficit. So income and expenditure account is similar to profit and loss account. Apart from this, we should know about the income and expenditure nature. This account records only the revenue transactions. Only the revenue transaction, which means income and expenditure. It omits assets and liabilities. The capital expenditure and the capital receipts should not be recorded in this account. So we should focus on revenue transaction. So income and expenditure account focuses on revenue transactions only. And another thing, this account allows to record non-cash items. Receipts and payment account should not allow to record non-cash item, but income and expenditure account allows us to record non-cash items because this account this account follows accrual basis. Under accrual basis, we should record cash items and non-cash items. Okay. So first, once again we are going to see about income and expenditure account. Income and expenditure account it is prepared at the end of every accounting year. It is prepared to find out surplus or deficit. What do you mean by surplus? The excess of income over the expenditure is treated as surplus. Excess of income over the expenditure will be treated as surplus. What do you mean by deficit? Deficit means the excess of expenditure over the income. The excess of expenditure over the income will be treated as deficit. This account, which account? Income and expenditure account, only records revenue transaction. What do you mean by revenue transaction? Recurring. Recurring in nature. What are the transactions recurring in nature? These transactions are known as revenue transactions. And the non-cash items, depreciation, bad debts, provisions, and such things are recorded in this account. Okay, right. And then balance sheet. Finally, we are going to see about balance sheet. Not-for-profit organizations also prepares balance sheet to know about the financial position of their organization. Okay. So not-for-profit organization is a non-trading concerns. So first of all, we are going to see from the beginning. What do you mean by not-for-profit organization? Some organizations are established for the purpose of rendering services to the public without any profit motive. They may be created for the promotion of art, culture, education, sports, etc. Okay, these types of organization do not undertake any trade activity They do not run any profitable business. They will render a service to the public. They collect a donation. They will get a grants from the governments. Okay. This organization prepares a final accounts at the end of each accounting period. In final accounts, the final account contains three steps. One is receipts and payments account. The receipts and payment account is a real account in nature. It records only cash transaction. The non-cash item should not be recorded. The receipts and payment account is prepared to find out closing balance of cash in hand or bank balance or bank overdraft. And then this account is a real account in nature. And the second account is income and expenditure account. Income and expenditure account is similar to profit and loss account. The income and expenditure account is prepared to find out surplus or deficit. And then balance sheet. The balance sheet is prepared to find out financial position of the business. So in another video, we are going to discuss about the problems. What are the sums are there in the unit 2? We will discuss and we will solve the sum one by one. Okay. So you should keep the fair note and write the introduction, and then we will start to solve the sums in the books. Okay. Thank you.